Something just clicked in the XRP market that hasn't happened in weeks? Let's break it down. Here's where we are right now, sweethearts. XRP is sitting at $1.0092, basically flat, with just a tiny 0.03% bump today. Now, I know that doesn't sound exciting, but here's the thing. Sometimes the most boring price action sets up the biggest moves. You know what I've noticed? When everyone's looking away, that's when the smart money starts positioning. Here's why this number matters. The RSI just hit 35.08, which means we're in oversold territory. Think of it like a rubber band that's been stretched too far. It's got to snap back. The price is hugging that lower Bollinger band at $1.0013. And historically, well, that's where bounces love to happen. Now the MACD is still bearish at minus 0.0229, but here's what's interesting. The momentum is slowing down, which tells me the selling pressure is getting exhausted. The big story today? The dollar is flexing its muscles at 100.009, and that's been XRP's biggest enemy lately. These two have a nasty negative correlation of minus 0.6992, which means when the dollar goes up, XRP usually gets knocked down. But here's the twist. Sometimes when everyone expects that relationship to continue, the market does the opposite, just to keep us all guessing. Now on the regulatory front, it's been pretty quiet lately. The XRP ETFs are seeing outflows of $15.2 million, which, honestly, that's not great news for short-term institutional interest. But you know what? Sometimes institutions sell right before the bounce because they're following old playbooks. Smart retail can benefit from their timing mistakes. The mood right now is, well, pretty gloomy. The Fear and Greed Index is sitting at 29, firmly in fear territory. XRP search trends are low at 29 too. But here's what Grandma always taught me about markets. When everyone's scared, that's often the best time to be brave. The FOMO spread is practically dead at 2.0, which means there's no buying pressure yet. But that also means when it comes back, it could come back fast. The big players are doing something interesting. We've got 892 whale transactions happening. And get this, whales are controlling 99.99% of the trading volume. That's 9.354 trillion XRP moving around. Now, when whales are this active during a price decline, they're usually not panic selling. They're positioning. Smart money doesn't move this much unless they see an opportunity coming. In plain English, we're at the final stage of what Elliott Wave folks call a C wave correction. Think of it like the last sneeze in a cold. It's almost over. The Wyckoff analysis shows we're in what they call markdown phase B with 44% confidence. Basically, we're in that messy middle part where the price is trying to find its bottom before the next move up begins. So what does the AI think? This is where it gets exciting. The AI is predicting $1.7920 in the short term, with a whopping 97.4% probability of upward movement. That's a 77% pump from current levels. For the medium term, we're looking at $1.4025, and even the conservative long-term target is $1.0975. Now, I'm not saying the AI is always right, but when it's this confident about the short term, I pay attention. But here's what could go wrong. Those ETF outflows of $15.2 million show institutions are still not convinced. And that strong dollar? It's been XRP's kryptonite lately. If DXY keeps pushing higher, it could delay this bounce we're expecting. Also, we're still trading below all the major moving averages, so the overall trend is still down until proven otherwise. Here's my take, and I'm looking at this as someone who's been watching AI predictions for a while now. This is a limited buy situation for short-term swing trading. Entry zone is $1 to $1.010. That's right where we are now. First target is $1.180 to $1.200. Second target is that juicy $1.400 level. But, and this is important, Set your stop loss at $0.980. Don't risk more than 5 to 10% of your portfolio on this trade. Hold for 1 to 2 weeks max. The setup looks good, but stay disciplined. That's it for today, lovely people. If this analysis helped you see something you missed, smash that like button and subscribe for more AI-driven market insights. Remember, I'm just sharing what the data shows me. Always do your own research. See you in the next one.